Really, since I guess the recent market high of September 20th, we've seen obviously higher volatility and a little less confidence in the markets. It's a little reminder, if you recall, back end of January, beginning of February, a very high level of volatility. So we're seeing investors who clearly have taken a little bit off the table, have moved, if they're remaining in equities, into low volatility equities and away from kind of the momentum-driven ETFs in particular.
A lot of your ETFs focus on some of the high flyers, the FANG stocks, and those are the stocks that have really been under so much pressure lately. What happens? Are people worried about those stocks, and how much exposure is there in the ETFs that you manage?
Right. Well, clearly, our biggest ETF is the QQQ, which obviously has a high weighting toward those stocks. I think what's interesting is we had sentiment turn from end of September into mid-October quite negative. But also you had some technical reasons. You think about October 31st is usually the tax year end for a lot of mutual funds. So you have a lot of tax-related activity, which I think kind of fueled some of the volatility, the negative sentiment. It's going to be interesting now if we do see, rest of the year, kind of this concept of reverse window dressing. Will investors revert back to momentum and growth as has been the leaders most of the year? Or, again, the inflows we've seen in low volatility in equities, shorter duration in fixed income ETFs, is that going to kind of prevail through the end of the year?
Dan, you mentioned the episode back in late January, early February, where you did see really a lot of turmoil, really these spring-loaded moves in the markets. Now, a lot of that was attributed to sort of the unwinding of these volatility exchange trading products, as you know, VIX futures-based products. It doesn't seem like that was an issue right now, but are there any of these kind of highly engineered ETF categories that seem like they were exposed during this downturn as basically being a source of exacerbating the volatility?
No, at Invesco, we don't offer those kind of leveraged or inverse products. So, but I think in general, I don't think that's a major issue. I think the real focus has really just been, I think, sentiment. A lot of longer-term investors focus on kind of portfolio rebalancing. But no, not aware of any kind of issues related to products that are not really exchange-traded funds, but more, as you know, in the exchange-traded note area issued by banks. But I'm not aware of any difficulties.